welcome to the daily insights that matter. Now, the Indian government has been really trying to sell off its stake in various public sector enterprises, but it seems like they're struggling to hit their targets year after year. Now, they were supposed to sell their stake in IDBI Bank, but it looks like that might not happen until next March. Now, this is causing some issues because they were hoping to make around 15,000 crores from that sale, and they need to reach a total divestment target of 51,000 crores for the current financial year. Now, the government's divestment target of 51,000 crores for FY24, but as on August 21, 2023, the value of divestment receipts stood at 5,600.3 crores only, according to the DIPAM website, which is the Department of Investment and Public Asset Management. Now, this is just about 11% of the government's target. Now, it's no secret that the government's track record with divestment hasn't been all that great. They've consistently set ambitious goals in recent years, but consistently failed to achieve them by a significant margin. Now, in the current instance, they have opted for a more conservative target of 51,000 crore rupees for the current financial year FY24. Now, the main purpose of disinvestment is to alleviate the government's financial burden and generate funds for specific purposes. It's intended to bridge revenue gaps when the regular sources fall short. However, it must be acknowledged that due to their subpar performance, disinvestment hasn't been a major contributor to reducing the fiscal debt. Now, to compensate for any shortfalls in disinvestment revenue, the government is banking on additional non-tax revenues such as dividends from the RBI and state-owned banks. Now, this strategy aims to help them maintain their fiscal deficit target of 5.9% of the GDP for this financial year. Now, from an investor's perspective, we anticipate a neutral outlook on the government's ability to achieve the divestment target. Now, meeting the target could certainly set a positive tone for the year ahead, but any failure to meet it wouldn't significantly impact the fiscal calculations. Now, the Indian rupee, which traded at an all-time low of 83.2 against the dollar last week, is further expected to decline on the back of a strengthening US dollar and a weakening Chinese yuan. Now, according to a poll by Business Standard, 50% of the participants expected the rupee to weaken further and touch the 83.5 mark, while the other half mentioned that it was about time for the decline to conclude. Now, the primary factor behind the rupee's decline was the rise of the dollar index, which indicates the robustness of the US dollar. Additionally, the depreciation of the yuan, a deliberate strategy by the Chinese government to stimulate their sluggish economy, further contributed to this situation. Now, the Reserve Bank of India has adopted proactive measures, including interventions through dollar sales, to ensure the stability of the rupee and prevent it from reaching historic lows. Furthermore, with reserves amounting to approximately $600 billion, the Indian economy and the rupee are in a favorable position. Moreover, the dollar index, which serves as an indicator of the dollar's strength, has also reached its peak along with the US yields. Now, this could potentially moderate, offering some relief to the rupee's situation currently. Looking ahead, the long-term potential for the rupee to gain more recognition on the global stage is influenced by several factors. Now, these factors include the trajectory of the export growth, the feasibility of achieving full capital account convertibility, and the consistent progress of the national economy. Now, despite existing challenges, these aspects might contribute to elevating the Indian rupee's prominence on the international currency landscape. With that, this is Raj Mehta signing off, wishing you and your loved ones the very best. Thank you.
Did you like watching this video? Then download our app, Informed Investor, to watch more such informative and interesting videos.
Equity investments are subject to market risk. Read all investment-related documents carefully. Visit www.researchandranking.com